Alright, should be live on YouTube. Good afternoon, everyone. My name is Patrick Hawe. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All trades placed by myself are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial conditions. Please pause the video, read this disclosure. Position disclosure, still no new swings from me. As the market bearishly time corrected for a day 3 in a row. So let's chat about it, and then let's chat about tomorrow, which is our Fed day. So markets gave a doji today, pretty much closing. Actually, I think we're up a little bit after hours. This isn't quite where the S&P closed. Yeah, up a little bit after hours, but closed a little bit below the open. But pretty much a doji day. We actually poked yesterday's lows and then came back above. We were expecting not too much on the day before the Fed, which is typically what you would expect on the day before the Fed, short of any other events or anything like that. But pretty much 3 days of bearish time correction, right? We've been talking about that. Starting on this day, then yesterday was a fairly strong rally, pretty decent close, but overall not really, not getting down to support, not really getting back above resistance in any meaningful way. Still a bit extended, a little bit extended to the downside, but this ADMA is almost caught down to this 390 level. And if you look, if you just zoom out a little bit overall, we're saying in the afternoon here, we're pretty much exactly this afternoon in the same point as we were Friday morning when we opened Friday morning, right? So in 3 days, we've accomplished nothing but either, made you some money or lost you and frustrated, you some money, depending on how you respected your levels, how disciplined you were, and, just what you were looking at the trade. So 3 days of bearish time correction, where does that lead us? I guess we'll just talk about today a little bit more. So we opened, gap down, sold off a bit. So I wrote in the title of this video 3850. The SPY 384. So yesterday we were saying look at SPY to buy back through 384. This 384 is proving to be a bit of a level. And I was looking at it a little after hours. It looks like that's 3850 in the S&P cash. So this is just SPX, the cash S&P. And I just want to call it 3850. I'm not a big fan of using 3846 spot 50 and 3856 or whatever. To me that's like using 389.80 or whatever. Just I like to keep, it's really about the whole levels. And that's why when you're playing these whole levels, you got to give things a little bit of breathing room because you do get those tails. But pretty much 3850 here in the S&P cash is what correlates to our SPY 384. So again, if you remember yesterday, SPY 384, aka 3850, proved to be a bit of a level from Friday here. Resistance, support, resistance again, breaks out through. So yesterday we were saying look to buy SPY back through 384 if we can rally up through there, which we did pretty much right away off the open. Gets through 384, comes back, tests it, holds the rest of the day. And then now coming into today, we lose 384. Can't really break down though. And I guess just talking about, the intraday actions and signs to look for, because you're always trying to look for signs and clues as to what the market may or may not do. And I remember this morning while SPY's doing this and looking pretty, pretty bad. I mean, downtrending, moving average slope down below this moving average here, trying to break down. And while that's going on, Apple, which of course is a very important, market leader here, is rallying, grinding up, breaking yesterday's highs. Literally just going and going and going, not really, besides this one candle here, not really breaking down at all. So we were watching the Apple doing that. I think Tesla was holding up pretty well. Netflix, our other relatively strong name, Tesla and Netflix have been the two that we've been talking about, also holding up really well, doing okay today. Back at this 250 level, which we were saying that's going to be the next kind of breakout level for Netflix, this 250. Was able to poke above 250 back here, but never closed above it. And so Netflix was, our relative leaders, our relative strong names were acting strong, and Apple, which has been hit or miss lately, but was nice yesterday, was acting strong again this morning. So using that as a bit of a clue, we were trying to, or at least I was trying to argue. I feel like just this isn't really gonna spill over in a big way, literally unless Apple just like, I guess not randomly reverses, but if Apple just totally reverses, then that's another story. But why would it, right? Like, you can't. Sometimes I feel like you, and by you I mean me, or me as like a newer trader, I would think like, oh, but what if Apple reverses here and then like the market just totally implodes? And like, yeah, that could happen, but you got to use, common sense and probabilities and whatnot. So like, while that could happen, that's not happening. What's really being told to you by the market is the market looks bad, but it is tailing up, tailing. It's really not quite breaking down. And under the hood, we had some things like this Apple doing really well. I think this UVixy wasn't doing too much either. Yeah, so SPY was making new lows around 10 o'clock, and while SPY's making new lows, UVixy's not making new highs. That's another clue. What was TLT doing? TLT was rallying, which is good. Rates were going down a bit. That's good. I think our dollar was coming down a little bit. That's good. So all of these signs under the hood are telling you this market shouldn't be too bad. And then eventually we break up off this 384, which again, I get that's going to be like the big level for tomorrow. I'll give you an upside and downside level, but the big level is definitely going to be this 384. And then so eventually we break back up through this 384, and that's when Apple really rallies, Tesla, Netflix have like a leg up and whatnot. So buy your relative strength in an up market for sure. Don't try to buy the weakest stock, even if the market's going to move up. The weakest stock probably has the weakest bounce, while as the uptrending stock probably continues its uptrend. So SPY breaks up this 384. Then we roll back over. We got some ECB comments in the afternoon. Some Putin chatter as well. I'm not sure if that's what did it or if it really was just kind of pre-Fed chop, a liquid market. Because then we rallied right back up and pretty much closed at this 384 level. So SPY 384, S&P 3850. So now tomorrow's Fed day. We can move decently either way. I say that because, and I was talking about it this afternoon, we've gone sideways for 3 days. I know it's not a whole lot, but it's not 3 straight down or 3 straight up days like this. We've gone sideways for 3 days. It's much better to look for a big move either way, and it's easier to play a big move either way when you go sideways, because you can use, like, you don't have to, like, say SPY's above 384 and we go up tomorrow, and if you don't have SPY from 384, you don't have to feel like you missed it. You can buy high to look higher, and you can short low to look lower once you go sideways into moves. Because it's consolidation, right? Versus if you're pricing a move in, sometimes you have runs or sell-offs into it, and then you either look the other way, or you just don't get the upside you should get. So like, I don't know, if the Fed was tomorrow and this was our move, and Powell comes out not too hawkish, that probably doesn't send us down too hard, but it might have been priced in already. So you can't really look to buy high to sell higher when you've run up into it and you're extended, right? But we're not really extended either way. We are downtrending. Our moving averages are sloped down. So technically we should look for lower and we should break to the downside. But you never know. The Fed can change things, and fundamentals, all that matter more than technicals. But technically speaking, we're in a downtrend. We should look down. So for tomorrow, we'll see what he says. Is he going to, we're either going to raise 75 or 100. 75 seems like a pretty much a guarantee. I don't know why he would raise only 50 when 75's pretty much been locked in already. So I don't know if that would be a good or bad thing, but it seems like at least 75 difference between 75 or 100. I don't think it's, we go up on 75 and down on 100. It's definitely not that. It's more what he's saying, how he's feeling, and basically the way I'm thinking about it is just, is he feeling like this last inflation report was a bad scare and he is nervous? Or is he going to kind of make light of it and say, yes, some of it was bad, but some of it was better? If he does the first one, which is it was scary to him, that's going to be probably max hawkish, and that should send us down. And if he tries to make light of it and say, well, some of it was bad, but some of it was okay, and we're just going to let the data tell us, and we'll keep adjusting, and we're not really too scared. We think we got this under control. Maybe soft landing, which, we'll see. But if he's anything like that, then that should at least not send us down too hard, and possibly even send us up. So key level 384, S&P 3850. And then on the downside, it's looking like 382. If we lose 382, that's the level to short through. And then on the upside, it's definitely not perfect here. But probably either 388 or 387. It's too bad we rallied that hard yesterday and then gapped it down like this, because it's definitely not. All we did was really close this gap in SPY, I guess. Close enough anyway. Yeah, we closed it. Close enough. Obviously 390 too, but you could probably do 388 on the upside in anticipation of 390. 390 is just a little bit far away. I don't want to wait for all the way for that. So at least like 388, maybe even 386. We were able to get above, but not really stay above this 386. So if as long as we're not too close to 386, like if we're around 384 and we start breaking up, you could probably do 386. So 384, above it, good. Below it, not good. And then on the upside, if we're like really breaking up, buy through 386, I'm thinking. And on the downside, if we're really breaking down, short through 382. Don't fight that short if we're back above 382, because they have been buying it. That's the level that they're buying. So you're shorting for a breakdown. You're shorting the level that they've been buying, right? So don't fight it if it comes back above 382, and same thing on the upside. Don't fight that long if it breaks 386 and back below. So yeah, that's the Fed, that's the market, that's what to expect, which I'm not really sure what to expect, but I'm ready for either way. I'm ready for it to go up, I'm ready for it to go down. I'm really not sure which way it's going to go. Technically, we're bearish on the daily, so technically we should go down. But technicals don't matter for what the Fed's going to say. And then I guess just some plays that we did this morning, looking back, because I like to talk about that. Nothing really great besides this Ford, which was pretty good. I actually didn't get this one myself, but I think a good amount of you guys did. It was pretty fast, just breaking this 14. But Ford came out and lowered guidance. We were saying either to look for this short versus 1450 or down below 14. I was saying this morning, it reminded me of the new core play that we had, which was pretty similar here. It was gapping down a lot, but it was, pretty bad guidance report. I guess definitely Ford arguably wasn't as bad, but all the same, it just seemed similar to that. And you were also gapping down below all this consolidation. So I think a good amount of you guys actually caught this one, which I'm obviously happy about. So yeah, nice. Just literally lost 14 and never went above. That never went above. Maybe, even looking at like a 2-minute chart here. 14. Yeah, lost 14, never went above. They certainly don't make them all that easy, but that one was pretty good. And I don't think anything else was too great. Boeing never triggered. We were looking at Boeing's data headline over 148, but that never triggered. This APOG I didn't even look at off earnings. 41 was a bit of a level that we talked about, but never triggered 42. Netflix 242, we've been talking about that level, which you definitely could have played with this today. Netflix 242, we had been mentioning yesterday, which this failed. And you can see 242 comes down, 242 fails. Grinds up into it into the close, and then today up through 242. Tries bouncing off that a couple times and never gets back below it. So that was okay. You could have played with that. Netflix 242. And NCLH got an upgrade, but that never triggered 1580. Yeah, technically never broke 1580. That 1580 was the opening print. So you shouldn't have been able to, even really get triggered on that. And then Tesla 710 paid a little, but ended up rolling back over. But Tesla 710, just your daily breakout level, which I was hoping for an inside day from Tesla today. That candle's not looking as good now. Looks like 710 should fail again. But Tesla 710, broke, paid a little, and then rolled back over and stopped you out. So nothing too fantastic there. Besides that, Ford was pretty decent. And I think that's all I got. So yeah, Fed day tomorrow. We'll see what Powell says. We'll see if he's nervous about inflation, or if he keeps his cool. We'll see. So yeah, that's all I got. Happy to answer any questions or take a look at whatever you guys want or traded or anything. Beyond Meat suspending that COO. That was a pretty wild headline there. I see Michael here on track to a good trading practice. Today went green. Shocked I engage in classic revenge with more size. Is there a cure for this mentality? I never want to do this again. How do I get past this? So you revenge traded. So what are you saying? Your short of TQQ was a revenge trade? My first answer that I would say that just comes to mind is just keep it simple with the levels. So if you are, if you're shorting because you're either below support, you're shorting versus a level, or you're shorting a breakdown and the level breaks down, and then you get stopped out because it breaks back up, but then it breaks back down, I wouldn't really consider that revenge trading because you're still trading the level and you just got shaken out because either you were too tight or it just shook you out. Like sometimes it just shakes around a bit and it takes some time and shaking to, clear out the area of buyers that are there before, those buyers are cleared out and the sellers can continue pressing down. So, I wouldn't really, just keep it simple with the levels. But like, if you're shorting because a level breaks down, or you're shorting versus a level, and then you either go to get stopped out, or you go to the point where you should get stopped out, but you're not getting stopped out, that's revenge trading. Either taking your stop out and not respecting the level, or, just staying short and shorting on the way up even though it's above that key level. That's revenge trading. So I don't know. I hope that kind of helps. That's the way I would look at it and do it. I can't press the keys or not press the keys for you. I don't know. The other thing I always tell myself too is just there's always more opportunities, which, I know it sounds stupid, but like there really is. There's always going to be more opportunities. There's always going to be better trades. There's always going to be good plays, good longs, good shorts. There always will be more. So just wait for the next one. Any advice for someone who's down? Yeah, my advice would be to size down in like a gigantic way and build consistency for yourself. So I don't know what you would risk per trade, but literally don't lose more than like $20 to $50 in a trade, even $20, and don't go for, not that you shouldn't go for like big winners, but go for like singles and doubles, and just lock in $20 here, $30 here, $50 here, and you start to build that consistency, and hopefully you build that consistency with, improving your trading by just practicing your trading, and getting better, and fixing the mistakes that you were making. Like, I can scalp and make money, but then I'm like, I gotta make X before I can see any of it. I mean, $50. I mean, there's five trading sessions in a week, and say there's 4 weeks in a month, so that's 20 trading sessions. If you make $100 a day, that's what, 2 grand. So if you make $50 a day, that's $1,000. That should be like double, even if you're paying like the max fees with T3. At least it depends what you're doing, but if you're smaller and lower volume, that's at $50 a day, and you should be making more than double what you're paying, or around there anyway. So $50 a day like sounds small, but like it adds up. $100 a day is small, but it adds up. So start to try to make $20 a day, and just like do that, and don't fall in love. That's something I think I've been better at in the past year or so, which has kept me from having like a real bad day, is fall in love with small losers. I think that's a quote by someone. I don't know if that's a Stevie Cohen quote, or pretty sure someone says that. But and I don't mean it, it depends on the type of trade too. Like if you're taking a swing, being down on a swing trade is not the same as taking a loss. Taking a loss is taking a loss, right? Not to say that you should never take a loss, like Josh Leffler over there. I don't know if he's listening to this. Just kidding, Josh. But learn to love small losses, and then once you're doing that, though, also practice what we were talking about recently with going for 1 to 2 like risk reward, and not selling half at 1-to-1, or not even selling like any at 1-to-1. Like risk $20 and make $30 to $40 on that trade, and that's it. Like, don't do anything else. Don't sell half and trail and blah blah blah. Just find your level, find your setup, risk $20, make $30 to $40. And then if you can't do that, that's fine. You're just like not executing right, and we can work on that. And then when you're starting to do that, and then you can start to do that consistently, and then you can build from that in a big way. Whether you just scale that, and then once you scale that, then you can start selling some and trailing and blah blah blah. But so yeah, and then yeah, I think that's everything. So yeah, hope that helps with that, Christopher. Let me just check YouTube. I see on YouTube, expecting more sell-off before the announcement tomorrow. No, I wouldn't expect more of a sell-off. And I'm not necessarily expecting a sell-off at or after the announcement, but it's very possible that it could happen. We have bearishly time-corrected for 3 days. It's, we're not oversold or overextended or overcooked to the downside really here coming into the announcement. So if SPY that's why we got our levels, right? 384 and 382. If SPY goes below 384, 382, you can look to be short. And if it gets back above, then I would get out of the way of that. But I wouldn't expect anything drastic before the announcement. What is my Tesla view showing relative strength even during the market CPI sell-off? Oh, yeah. Yeah, we've been talking about Tesla's relative strength like literally every day for probably like a couple weeks now. If tomorrow we're bullish on Fed, Tesla can break. What do you think? Yeah, Robert, great idea. So Tesla 310 breakout that didn't go today but is still setting up well. that would be one to go to. So, like I'm saying, if we go up tomorrow, you could look to buy SPY either over 314 or 316. But even better would be to buy a relatively strong stock if the market's breaking up. So that would be, Tesla 310 or 313 for confirmation. I love that idea, Robert. I think that's a great idea. Maybe Netflix even 250. Maybe we'll have to see where it is. Maybe 248 as well. 248 was a little bit of a level. So Netflix either 248 or 250. 240 is every $2 basically. So Tesla I would do either 210 or 212. Or sorry, yeah, you could do three. No, I like 312 still too. Tesla you could do 310, 312, 313 if we're breaking up, and depending on where Netflix is, 246, 248, or 250. I like the idea, Robert. Relative strength, all that. Your head is in the right place. Yeah, Google made New Year lows today. So this is a bigger problem for, I guess if we want to chat about even like bigger picture problems with the market. There are a few warning signs out there, and that to me would be, first of all, the 10-year yield did make a new high on the year, and is staying there. That's I guess you can use like TNX. There's a couple ways to look at it, but we talked about this 10-year is not a good picture, bigger picture for the market to make a new highs on the year. And it poked it a couple times recently, but really did it today. So the 10-year yield, new high on the year. That some people think spells trouble and like more likelihood for a new year low on S&P to come. And then, Google has made a new low on the year. Nvidia, we know, has made a new low on the year. Meta, we know, has made a new low on the year. That one has been bad, though. And then Microsoft yesterday and today has made new lows on the year. So it's not great to see some of these leaders and some of these real big names making new lows. Apple still looks great. Tesla still looks great. Netflix isn't as big. And Amazon still looks okay, but starting to look worse. But that 10-year, and then even more so some of these bigger names, Google, Microsoft, making new lows on the year. It's not exactly great to see your leaders like this making new lows on the year and not holding up, right? So that's not great. Justin on YouTube, I see. I don't know which time order these chats came in. 8:21 I watch on daily. Hourly 30, 15, 5. I never look smaller than 5. Algo got 1 to 5 lockdown. Yeah, I mean, I look at a 2 minute for execution sometimes too, just to be extra specific. But I never look at one of them at one time, right? Like they all go together. I also look at R-ball 2 or 3 in time of day and market direction. Yeah, definitely makes sense. I mean, I don't have like a R-ball 2, so I don't look at it. I just kind of eyeball the volume and how that volume compares with how the volume did. Just look at the 5 minute chart and scroll out and kind of eyeball the volume. So Microsoft has that one thing. It's kind of distorting that a bit. Like you can see SPY's volume today felt a bit crazier. You can see this volume was a bit heavier, but for the most part, just a choppy week so far. Let's see. Putin's speech at 3 a.m. our time. How much could it impact futures? I suppose it could impact them if he talks about nuclear war. But I don't know. I don't know. I mean, the Fed's gonna impact us probably more than anything he has to say. So I'm not really too like worried about it or anything, but I don't know. I mean, we'll see what he has to say. It doesn't seem like he's gonna come out and say peace and love. You know, the war is over, hoorah. So probably more bad than good. But you know, I'm not shorting futures, betting that they're gonna go down on Putin's speech. I just want to read Alex's comment. I did some. Just reading this comment, yeah. Yeah, I mean, keep those like those day trades. Really try to keep those losses smaller because one, obviously, a small loss is better than a big loss. But I've done it too many times at this point where I haven't done it in a while, and I'm happy with myself like that. But something where that's what I was saying, revenge trading, and it might not even be like a second trade, but something where you think you should be right and you're not right, and you don't stop out because you're like mad that you're not right, and you're like, they're just gonna shake me out or whatever. And I don't want to get shaken out and lose this $100. Like, I'll just let it go to 150, and then that $100, it snowballs, and that $100 loss turns into $1,000 loss for no reason other than you, and by you I mean me being an idiot. So keep the losses smaller, and keep them smaller to the point where that's why I say you can try again. Like, use your level. If you break above the level, if $100 messes you up mentally to lose in one trade, then lose $50 and be ready to try it again. And if you get shaken out but then it breaks back above the level, I don't really consider that revenge trading because it shook the level. But then if the buying's enough to get it back above the level, it might be real, and that might have just been a shakeout. So you lose a small amount, but if the trade works, it should pay you at least 1 to 2, if not 1 to 3, 1 to 5, 1 to whatever risk reward. So, and that's why I was also saying you don't necessarily need to dump half right at 1 to 1 on that type of play. Because if you don't sell, if you're risking 50 and you're not going to sell any until you're up at least 1 to 2, it just, the math works out better for you to be able to try to cut once or twice, and if it fails, and then be able to retry it. So yeah. Just reading through VTF. My biggest thing is being done when up. It's hard when on the computer doing other stuff. Do you mean like being up money and not trading anymore? Yeah, I mean, just set a downside limit for yourself on, whatever the number is. Don't lose more than a certain number. I don't know. If you're up $150, don't lose. You better go home with 100. And if you don't, then you have no one to blame but yourself. It's not all puppies and rainbows here. This is Wall Street. And if you make mistakes, I mean, don't be too hard on yourself, but like you gotta fix them, and you gotta learn from them, or you're not gonna you're not gonna survive. The math isn't gonna work out for you in the long term. So you gotta be tough, and you gotta fix it. Would you use the inside 2 on Tesla at 1044? First of all, I don't think I really use like inside bars on 2 minutes, but I mostly look at the 2 for execution when I'm doing like extension trades, and if I want to be short, it's better just if it's going to correct to the 5-minute AEMA, it's going to correct to the 2-minute AEMA. So I'd rather short it when it's extended there. Like, I want to short it when it's extended the most. I know it sounds like I'm picking the top or bottom. That's kind of what you are doing when you're doing that, but you're also just looking for a little reversal. You're not really looking, or I guess a little retracement, I should say, not a full-on reversal. Anyway, would use the inside two on Tesla at 1044 as a trigger the high day around 310. Yes. Well, I mean, no, but yes, no, because I probably wouldn't really look at this inside two and buy it based on the inside two. I would just be looking at Tesla day high, Tesla trying to hold up, not really breaking down too heavy when the market is. And then Tesla goes through the day high at what time? 10:42. What time does the market go through the high? Not till later. So at 10:42, SPY is breaking back over 384. And that's the key level, and that's what time Tesla's going to go through the high. Tesla's a relatively strong stock. So, like in hindsight, Jerry, I would say yes because that looks good. But realistically, what probably I would have done is I probably would have already been in Tesla because this candle triggered the day high. I probably would have been looking at this 309. I might have cheated on 309 because I would have seen, because 309 is still a whole number, it's a whole dollar. And I try to give a little bit of respect to all whole dollar levels, especially on like these bigger names. So I probably would have seen 309. I would have seen this fail 309 this morning. I would have seen it come back up towards day highs as I'm looking at SPY 384 and seeing SPY not really break down and Apple grind up. And I'm thinking in my head that this market probably really shouldn't break down with Apple being strong, dollar being weak, blah, blah, blah. I would have seen this come back up toward, and I would have been saying to myself, all right, day high is 309.30 or so. 309 is really what it needs to get above. And I might have cheated and bought 309 after seeing this tail come in, a tail back down, but then the tail be negated. So, these tails are telling you this is a 308.50 seller, right? 308.50 gets rejected, tail over here, tail, tail, tail. This is a 308.50 seller, comes back down, back up to 308, comes back down. 308.50 seller finally breaks. Tails back down. Maybe he's still there. Nope. 308.50 holds. Goes back up. Okay, so that seller is cleared. Maybe would have bought through 309. Otherwise, just bought through the day high, and my out on. So, I guess the long story I'm telling you is that I wouldn't have played this inside two because I would have already been in it through the day high with just around 309 ish as my entry, and probably 308.50 as my out. Because if it's going through the day high, it's going through 309. It probably shouldn't get back below 308.50 after it just did all that work to clear the 308.50 seller. So that is my long answer to your question, and that's how I would have played that in real time. That's probably how my head would have worked on that. You guys can hear me, right? My computer just kind of froze for a second. Okay, cool. Is there someone other than Derek to contact to approve trading parameters? You could email me, Justin. It's a good question. I mean, I don't know if you've tried just emailing the trade desk, because you could probably just email the trade. I mean, I guess you could try emailing me, but you should be able to just email the trade desk as well. I do see Tell selling off after hours here. My computer is like super slow right now. I'm wearing it down. Michael saying I also saw my stop fills way away. Slow, maybe. All is there a correct setup for routing? Like what? You just get slippage on your stops, Michael? Well, it depends what you name you're trading, but you should expect some slippage on stops usually. If you're using, like, if 308 is your stop and you're using 307.99 as your stop, you probably are going to get some slippage on that. So either use 308 or 308.01 as your stop, or just accept the fact that you're probably going to get some slippage. Nothing really to do about that, but if I don't know if you think like it's not anything more than just slippage, if it's like very far away, or if the order is lagged when it goes off and it's lagged and then it gets stopped out or something. Definitely ask Trade Desk about that. Got into Apple at 10:15, continuation hammer. Move stop up to break even. Got nicked hindsight. It seems so silly. Any thoughts on when you move stop? You got into Apple at the 10:15 continuation hammer. Yeah. No, it's not really. Oh, I guess you could be talking about the 5-minute chart. Okay, yeah. 154, yep. Move stop up to break even and got nicked. Yeah, what'd you get nicked on this 1035 candle? Yeah, you moved your stop too early. This didn't even make a day high yet. So you gotta at least, for a pivot to come in, which your price isn't really a pivot, but I do believe in trying to move. I don't hate moving stops up and keeping things tight, but you still got to do it with somewhat of a important level sense. I think you just did it too early. You need this day high to come in for a pivot low to come in. So what stopped you out actually became the pivot low, right? It just didn't perfectly follow this moving average. But after this day high comes in, you could have actually moved your stop up to what ticked you. So I think you just moved your stop up too early. And I've done that before. I've done that many times before. You definitely don't want to do that. If you are really concerned about making money and not only having break evens, you could move half of your positions stop to your price, to your break even price after you get done. You risk that. Like, it's exactly what you're risking. There's no reason to move your stop up yet. And honestly, even if you wanted to move your stop up, I probably would have used like this bar's low or something. That didn't, but I don't know. That's just holding by a couple pennies. I think you just moved it too early. You gotta let that new day high come in, and then once that new day high comes in, that's when it's proving itself. That's when you can start to move it up a bit more. But until that new day high comes in, there's a chance that this double tops and comes back down. This double tops off 150. What is this? 155, 156. Yeah, 155. So there's a chance for this for like to double top and come back down. So yeah, just you gotta let that day high come in. You gotta let it prove itself some way, which it hadn't quite done that yet. That's all. Usually executing 100 shares in a thick. Um. So 5 cent. I mean, I don't want to say that's like not a lot, but I know Apple has a 1 cent spread, but you gotta like if you really watch the tape and the spread and not only the tape, but the bid and the ask by the tape, by the spread. 5 cents kind of, it really is the spread because they jump it around. Like they can jump the bid and the spread a couple cents above or below what the last print did. And how a stop works is it doesn't, you don't just like get to that price and then get filled, right? Whatever price you set your stop at, that's the trigger price. So your stop's not going to get set off till that prints, which is why if you're using a three, if your stop level's 300 and your out's 299.99, expect some slippage because your stop's not going to trigger until it prints 299.99. So that's why it's better to, if you want to avoid slippage, try to stop yourself out into where there should be some liquidity. And when you're doing that, you're anticipating that you're obviously anticipating that's going to go lower. So, you're using that liquidity to get out. But I mean, so, again, by the time, like, the trade, that level has to print on the tape, and then that level prints on the tape, your order gets sent as a market order to hit the bid if you're selling. It could easily move 5 cents in that time. So that's not, I don't know, it's not like all that much. So, I don't know. Hope that makes sense a bit, but Michael, but that's not like too much. Either expect more slippage or try to use like more whole levels of liquidity to stop yourself out. One extension question about Tesla. Where will you lock in profit after Tesla breaks 308? Extension question. Not. I'm a little confused at your question. Are you talking about like this 308 break? Sure. So one way, I think I've talked about this before. One way to have kind of there's two ways that I'm sure there's more ways, but off the top of my head, I can think of two ways to think of profit targets. One is just daily levels and resistance levels. So 310 is like your big level in Tesla. There's a chance that 310 breakout doesn't go today, therefore 310 doesn't break. Therefore, you probably want to sell a little under 310 because 310 might not break. So your daily level, and then two is price congestion, price consolidation ranges, and measuring those ranges. So this Tesla 308 break, Tesla ranged between 308 and 306 before breaking that out. So technically speaking, Tesla should have a $2 measured move that also lines up with 310. Do you buy everything at 308 and sell everything at 310? No. But again, if you're buying 308, I think really the more smarter move that makes more sense to me is buying either 309 or through the high. But let's say in hindsight you did buy 308, your out should probably either be 307.50 or 307, which is roughly 50 cents to a dollar of risk. So you probably want to sell some into 309, a dollar. And then once you get that sell into 309, you can probably move your stop up to your 308 price, or at least some of your stop. And then, look to sell more at 310 or so. So I hope that makes sense. But, I feel like the key to taking profit is take some profit and hope you're wrong. But again, just because like 310's the level doesn't mean you should try to sell Tesla at 309.99. Like, don't, that's like, I almost consider that being greedy. Like, sell 309, sell some at, your dollar in the money. I mean, I guess you don't have to sell some, but if you're not selling $1 in the money, then at least sell mid 309s. So, yeah. Mike, I've had a bit of tendency to want to move my stop up to break even early instead of covering my risk by selling 50% of the position. I guess Apple Trade is a good example. Yeah, I mean, you can either, like, for money management, not necessarily trading the right way purposes, you can either sell, I've talked about this before, either instead of selling half at 1 to 1, sell 75% at 1 to 1, and then you'll make money no matter what. Or, like I just said, if you sell half at 1 to 1, then you can move half of your stop up to your price. Maybe not the whole thing, and then you should make money no matter what, even if it's just a little bit. But other than that, don't move your stop up until you get to the point where you can sell some, because that's getting to the point where it's proving itself. And if it doesn't prove itself, but it doesn't stop you out, there's no need, buy the ticket, like, that's literally buy the ticket, take the ride. I mean, it didn't prove itself yet, but it didn't stop you out yet. And the reason you bought it is because you think it's going to prove itself. So, why change just because it didn't go quite yet, right? So, hope that makes sense. What time is Powell tomorrow? So rate decision is at 2 o'clock. 2 o'clock, the rate decision will come out. The algos will go crazy, and then the actual press conference is at 2:30. So Powell actually speaks at 2:30. I see YouTube comment here, thanking us for the knowledge. You're very welcome. Hoping to meet again soon. Pins looks interesting. Saw a chart about the most visited web pages in Ecuador. Pins was number 8. Interesting. Sentiment positioning, I'd say we're pretty much in the middle here. After going sideways for 3 days, after a Friday coming into this week, we're a little bit overcooked to the downside, but we're bearishly neutral here after going sideways for 3 days. So really not too much of an edge going into the Fed here. The only edge is on this daily chart, we are in a downtrend. We're downtrending below moving averages that are sloped down, which technically means we should keep going lower. But other than that, there's not too much of an edge going into it from like a sentiment standpoint, in my opinion. Hey Pat, I want to set up my scanner to look for Niners on the mark. Then I would look for price direction change. So all Niners out of 4,700 stocks show up on a daily chart. Yeah. I like Niners on like 5-minute charts too, actually. Yeah, that sounds. Is there a question there that I'm missing? I want to set up my scanner. Yeah, sounds like a good plan to me. I don't have a scanner, so I wouldn't really know how to set one up for you, but it sounds like a good plan. Yeah, 5 minutes is decent for 5 and 15, even decent for intraday stuff. Hey Pat, my question is about pre-market stock selection. Let's say the market is weak and gap down. Would you prefer a relatively weaker gap down stock to short or relatively strong stock for long? Well, I guess depends. Okay, so let's say market is weak and gap down. Well, it depends what the market's gonna do. So, like today, the market gapped down and the market was weak. So I guess if you're thinking short, I mean it depends. If you're thinking short, then yeah, short a relatively weak stock. But if the market breaks up like it did intraday today, then buy a relatively strong. Like, you can do both. You can buy a relatively strong name when the market breaks up, and when it's breaking down, you can short a relatively weak name. In a simple world, yeah, you should probably go for a relatively short stock. Or, I mean, sorry, relatively weak stock. You should probably go for shorting that. Make sure too to look at your volume pre-market. If a name's gapping up or down, but it's not really trading at all in the pre-market, then I don't know. I don't really care about that. I care, more about letting it open, letting the opening range build out, and then playing that opening range. So always make sure your stock has pre-market volume if you're paying attention pre-market in a big way. But yeah, I mean, so like, okay, so like bigger picture, if I think the market's going up, say like a multi-day type trade or multi-week type trade, then like Tesla, Netflix are my go-tos because we've been slightly extended to the downside. So I've been more talking about buying relatively strong names when the market breaks up intraday. But let's say this market is heading toward year lows in the next month, like October or something, which is seeming to be a bit more and more possible. I would look to short a Google or an AMD or an Nvidia or a Microsoft or a Meta. If the market's weak and going down, I would look to short those names because they're relatively weak, as opposed to shorting a Tesla or shorting, I guess Apple's been a bit mixed, but shorting a Tesla or shorting a Netflix. So yeah, hope that makes sense, Omar. And then I would wait. Like, I wouldn't try to short the relatively strong stock. I would just be ready to buy it should the market change. But if the market's going down, it's time for it to go down, then yeah, I would look for the ones that are at or near year lows, a la AMD, Google, Microsoft, Meta. So yeah, I think that made sense. Hope that makes sense. All right, I think that's everything. Looks like I got through all the questions. So yeah, Powell rate decision tomorrow, 75 or 100. What will it be? And then the man comes on and speaks to us at 2:30. So we'll see what he has to say. SPY 384, above good, below not good, below 382 definitely not good, and above 386 to 388 pretty good. But 384, S&P 3850, your key level to watch for above and below. And we'll see how we gap, then we'll go from there tomorrow morning. So have a good night, everybody. We'll see you tomorrow.